What's going on, everybody? Welcome back. In today's video, I'm going to break down a trade on GBPUSD on the daily time frame. This is going to be an example of how you can trade in the most passive way possible using the swing trading strategy that I have taught on this channel. If you've been struggling for a long time with the complexity of certain concepts within the trading niche, this video is for you. You're going to want to watch till the end because you're going to be mind blown as to how easy this actually is. And this example will prove to you without a doubt that if you have the patience required to swing trade, it can be easier and potentially more profitable than day trading. So we're taking a look at GBPUSD on the daily time frame. Now let's analyze all the price action that we can see here for now. Clearly price is bullish to the upside. Now there was a large period of time here where it was consolidating sideways, and then we saw a big push to the downside, clearing all the liquidity resting beneath these lows. Now, despite that big bearish move to the downside, price pushed up once more, breaking through all of this structure, breaking through this trend line liquidity here, and pushing to the upside once again, continuing the overall daily bullish trend. Now, let's zoom in a little bit and take a closer look at recent price action to analyze the trading setup. So within these candles here, we can clearly see price is bullish to the upside, very obvious, right? Now, we can see a consistent movement of higher highs and higher lows, and within these movements, there are retracements that can present trading opportunities. So as you all know, I like to use the Fibonacci tool for retracement. Anytime there's a low and it prints a new high, I'll drag the Fib tool and wait for a retracement. I favor the 71%. Now, as you'll see here, price didn't quite reach the 71%, and that's okay. That's just part of the strategy. I monitor a very large watch list filled with different currency pairs and different assets that are outside of the Forex market. And by monitoring all of these pairs on the higher time frame, I'm able to constantly capitalize on opportunities like this. So if I were to, for example, have set an order here and gotten missed, that's totally fine by me. I would simply move on to the next pair. There's usually anywhere from 3 to 5 opportunities that I'm looking at any given time. So some of them work out, some of them don't, and that's fine. I just delete the orders that don't tag me in and just keep going. Now, with that being said, price clearly missed the 71% retracement, but there was a clear push to the upside as well, creating a very definitive break of structure here. And I call it definitive because rather than just closing above it with the wicks of a candlestick, we can clearly see that price made multiple candle body closures above that previous high. So this to me is a very proper break of structure. And after that break of structure occurred, we can now see that there are multiple bearish candles printing. This is the beginning of a retracement. So obviously with this strategy, we're looking for another retracement and then another continuation to the upside to repeat this pattern here, the break of structure. We want to see another break of structure being formed right around here. So let's go ahead and set up the Fibonacci tool once more, and we'll see how price behaves this time around. So I'm simply dragging the Fibonacci tool from the swing low all the way up to the swing high, and I'm looking to enter at the 71%. Now, it's important to me that my 71% entry lines up in the general area of imbalance. As you can see, the currency pros indicator is showing imbalance there. It's also showing the 2 structural points to drag the Fibonacci tool from. So it's really easy. There's not much mental effort that goes into it. And I just want to clarify, the retracement level for me doesn't need to land directly on the imbalance. It just has to be in the vicinity of it, because to me, imbalance is an occurrence on the chart that pulls price in towards it. So if there's an imbalance around my zone, that means there's a good chance that price is going to trade into my zone and activate my limit order. So now that I've got the Fibonacci tool placed there, let's take the long parameter tool and drop it right on that 71%. And I'm simply going to snap my stop loss to the low of this candlestick and snap my take profit to the high of this candlestick. It really helps to use magnet mode on TradingView because then you can just drag and drop to the exact wick that you're targeting, and you know it'll be very precise. There's no guesswork. Now I'm just going to adjust this so that it's a consistent 2.45, and we're going to play price forward on replay mode and see how this one turned out. So there you have it. Very beautiful move. There was definitely a period of drawdown, more than 50%, a little more than 50% drawdown on this position. That was somewhat to be expected because the imbalance was below the entry. So we know that price needs to fill in that imbalance, which it did beautifully. It only pierced below with a few wicks just briefly before ripping to the upside. So let's use the measurement tool, as you can see off to the side here on the left. And all I'm going to do is drag it from where the trade was entered until where it was exited. And as you can see, it shows 19 days. So this is an example of how you could trade literally once a month and make substantial profit. Now let's take another look at the risk reward of this trade. It's 2.45. So for example, if you're trading a $100,000 account and you're risking 1%, which is $1,000, you would gain about $2,500 in return on this trade. Now that might not sound like much for you, but what if it was a $200,000 account? What if you were risking 2% instead of 1%? What if you have $500,000 in prop firm funding, or you have $1 million in prop firm funding? What about 1 or 2% then? Broker-backed prop firms are an exciting new development in the trading space. After dealing with the drama and headaches of firms switching between brokers, back-end tech, and trading platforms, I'm relieved to start a new funding journey with a firm that stands out beyond the rest. Think Capital, backed by Think Markets with 15 years of experience in the trading space, is making a big impact with simple challenge configurations and easy to achieve targets. They accept US traders, offer balance-based drawdown, 8% profit target for phase 1, and 5% profit target for phase 2. You can even withdraw your funded profits directly to your Think Markets personal trading account. The best part is they're integrated with both TradingView and MetaTrader 5, so you can take your pick of which reliable platform you'd like to trade on. I'm very grateful to be able to partner with Think Capital to offer anyone watching this video a 15% discount by using my exclusive code. Head over to the description of the video to find the link and discount code to sign up today. Now, the reason I'm providing these examples is because I'm trying to shift your mindset into thinking that frequency of trading is your issue, when in reality, undercapitalization is the real issue. One of the reasons a lot of people turn towards day trading is because they think it's a faster way to generate profits. And in a way, I guess that's true. It can certainly be beneficial to day trade if you don't have much capital. But the thing is, prop firms kind of eliminate that issue for us today. You don't have to start a personal account with $1,000 or $5,000. You can spend that money on a prop firm account and have access to multiple six figures and stack those prop firm accounts until you get to 7 figures. Once you're at 7 figures, trading like this, literally once a month, can put you in the top 1% of earners in your area. Like, I need you guys to do the math on this. It's actually substantial profit. Risking 1% on $1 million of capital, that's $10,000. Risking 2% on $1 million of capital, that's $20,000. Now, if you're getting a 2.45 return on that $20,000, just think about that for a second. Now, aside from that, one of the reasons that I favor swing trading so much is because it takes less mental effort. It takes less time to properly do, and it has a significantly higher win rate in comparison to day trading. A lot of successful day traders that I know have like a 30% to 40% win rate. And that's fine if you have a decent risk reward ratio. But what if you could have both? In my opinion, 2.45, or let's just say 2.5 for the sake of simplicity, is a pretty healthy risk reward ratio. And you can up this to a 1 to 3 if you target the 75% instead of the 71%. Then it'll be a consistent 1 to 3 risk reward ratio every single time. Now, for me personally, this swing strategy, I mostly used it on the 4-hour time frame, but I entered trades on the daily time frame as well from time to time. This style of trading for me has a win rate of anywhere from 40 to 60%. Now, for me personally, I used to day trade quite a bit. I still do from time to time, but I'm predominantly a swing trader. And when I was day trading, the win rate would be lower, but I'd still be profitable. But the thing is, there's a mental tax that you pay when you have a lower win rate. I would rather sacrifice a little bit of risk to reward if it means that I have a 60% win rate, because it is so much easier to manage from a psychological standpoint. Humans don't do well with taking constant L's. So when it comes to swing trading, my mental health is way better. I have so much more free time. It's unbelievable. That's why I'm able to create content, is because I literally have so much free time, because trading takes up such small amounts of time. I literally spend 15 to 20 minutes on a Sunday or a Monday analyzing my watch list, and then I'll set limit orders and just check on them throughout the week. It's so passive, it almost feels like just investing instead of trading at this point. The reason I'm doing this little psychology rant here is just to let you guys know there's other ways to look at this. You don't have to be scalping on the 5-minute time frame or the 1-minute time frame, losing all your hair, stressing out, on the verge of a heart attack. There's other ways to do this. And in my experience in the market and meeting other successful traders, I've also realized that as time goes on in your trading journey, you will naturally gravitate towards swing trading. Even day traders who do it successfully on smaller time frames, even they will admit, as my capital increases or as time goes on, as I get older and my priorities change and I want a family and to spend less time on screens, I will gravitate towards swing trading, higher time frames. This is something that pretty much every day trader admits, unless they're a beginner and they don't understand this concept. But in my opinion and in my experience, it is a natural progression that takes place the more time you spend in the market, the more your capital grows. You just want to gravitate towards higher time frames. Now, there's a couple technical reasons for that as well. Number one being when you have large amounts of capital, let's say you have $1 million that you can trade with in prop firm capital. If you're using that amount of capital to scalp on a lower time frame, like the 5 minute or the 1 minute, you will have ridiculously high lot sizes because your stop losses will be so small. And oftentimes those orders are not going to get filled. So instead of entering one position, you'll have to break up your one position into 10 or 15 different smaller positions. Now, when you're trading, for example, on the daily time frame or the 4-hour time frame, look at the stop loss size here. It's 125 pips. Now, some people are scared by that for some reason, but if you just use a position size calculator, there's no reason to be fearful of it. You can still use the exact same amount of risk, whether it be 1%, 2%, 3%, whatever you're comfortable with, and just use a position size calculator, plug in the stop loss size, and it'll tell you the exact amount of lot size that you need to use. But I can guarantee you it will be drastically smaller and easier to fill on the broker side in comparison to trading $1 million account with a 5 pip stop loss or a 10 pip stop loss. It's just not feasible long term, and there's no scalability with that. Now, the next technical point I wanted to mention in terms of swing trading versus day trading is that on lower time frames, there is significantly much more emphasis on liquidity. When you're doing intra-session trading on lower time frames, liquidity is always the dominant factor that you need to be paying attention to. However, when it comes to swing trading on higher time frames, such as the 4-hour or the daily, the only time I pay attention to liquidity is if I'm anticipating a reversal. If there's a bullish or bearish trend that has been overextended for quite some time and I'm becoming fearful of continuations and I want to anticipate a reversal, I'm going to patiently wait for a liquidity grab to show me that I'm going to be on the right side of the market. But on lower time frames, such as the 5 minute or sometimes even the 15 minute, there's liquidity purges in all directions throughout the session. And I'm not saying it's impossible, but it's certainly harder to grasp. Now, the way I look at it is that sure, it's possible to successfully day trade. You can generate significant amounts of profit in short amounts of time with small amounts of capital. So there are definitely benefits for it. But it also just depends on your lifestyle. Like for me personally, I can't stand sitting at this desk and looking at the screen. I don't enjoy it. I don't want screen time. I think we all in today's day and age have enough screen time. So I'm trying to live more life. I want to travel more. I want to spend more time with my kid. I want to exercise more and do fun activities. And so when I swing trade and just spend 15 or 20 minutes at the beginning of the week setting up all of these positions, and then I can just check my phone briefly to monitor them throughout the week, that is the ideal lifestyle for me because I can do that from anywhere. I can travel and not bring my laptop with me. I can do it all from my phone. I don't have to be glued to a session analyzing where the next liquidity purge is going to take place. As you can see here with this GBPUSD example, it's just a simple continuation trade. There's higher highs, higher lows, price created a break of structure. You patiently wait for the retracement back into discounted levels and then enjoy the ride to the upside once again. So I really hope that this example has provided insight into how swing trading can change your life. It doesn't matter if you're trading a personal account or a prop firm account. This is entirely doable for anybody. The only things that this requires 100% is patience and discipline. Without those two virtues, you're going to struggle with this. You need to be able to set up a position and just let it go. The detriment of swing traders is micromanagement. If you're just constantly analyzing the position every single day, every tick that it moves, trying to micromanage, oh, should I move my stop loss here? Should I have targeted here instead of here? Should I scale in here? The more you do that, the more you shoot yourself in the foot, and it just leads into analysis paralysis, and we don't want that. So the beauty of swing trading is that you can literally set and forget your positions. Now, you can feel however you want about this. It's free information for all of you, so it's kind of a take it or leave it situation. I'm not trying to convince you all of this. I'm just trying to enlighten you and open your eyes to different perspectives. You can say what you'd like about other educators on YouTube, other educators in the space who maybe contradict what I'm saying, but I have seen with my own eyes the level of success this has created for me. And I've seen people more successful than me that, for example, stick to the daily time frame solely. Like they don't even do the 4-hour time frame like me. Some of the most successful traders I know trade this style on the higher time frames with multiple 7 figures. I've also showed you on this YouTube channel how I have utilized this exact swing trading strategy to pass multiple 6 figures in prop firm challenges. I've even shown you proof of payouts using this exact swing trading strategy. And you know what? I'm going to continue to do so. So with that being said, hit the subscribe button for more videos like this. I would appreciate if you like the video and comment down below. And let me know if there's any other style of content that you'd also like to see from me, because I'm definitely open to ideas. Just make sure it's not something I've already done. Check out my channel, watch the previous videos, because I've covered a lot of educational topics and I enjoy doing it for all of you. I enjoy providing this insight and giving a different perspective and breaking away from the guru style content that's all over social media. I'm not going to get a whiteboard. I'm not going to do some crazy marketing things for you guys. That's not me. I'm here to provide value, education, and insight. So I hope you all enjoyed this, and I'll talk to you all in the next one. Take care, everybody.